So first up, as Steve said, we have a panel in investing in deep tech and life science for the non-technical. So introducing to the stage, we have Glenn Cross from Red Bluff Capital, Lelde Smits from the Capital Network, Mike Nicholls from Main Sequence, Katrina Edillor, head of Coca-Cola Europacific Partners Ventures, and Den Burykin at Fastlane Solutions, and Lisa Andrews at Wavia. Please make your way to the stage, panelists.
Hello.
Hey there.
Wonderful. Hello to all the panelists and the audience and all the conference members that are joining us. I think we have a fascinating panel to kick off today's session. And it is called, of course, Investing in Deep Tech and Life Science for the Non-Technical. As many of you would be aware, unless you are working in these industries, the topics can sound very technical. So I'm going to ask all of our panelists if we can keep it as simple as possible and provide some insights that perhaps the non-technical would still understand. And joining us, of course, on Zoom is Glenn. So a virtual and in-person presentation. My name is Lelde, and I won't be providing any technical insights, but my background is as a broadcast finance journalist and founder of the Capital Network. So we work with companies that are in the life sciences and deep tech space, and we help communicate what they're doing to a broader audience of investors. So perhaps kicking off with the first question, and I might go to Glenn first, who is on Zoom. What are you seeing as new and emerging trends that are gaining momentum and potentially disrupting current technology?
Okay, well, thank you. I can really only talk to life sciences. And obviously, we've seen the sort of disruptive technology in vaccine manufacture where, like most people in our sector, we were astounded that the industry was able to provide a number of vaccines for COVID-19 in such a short time frame. It was just incredible that the speed at which new technology was developed and the rapid regulatory processes that followed. So this sector is always one where disruptive technology is leading the way. So the mRNA technology that they use to develop some of the new vaccines is looking very exciting in terms of new therapeutics. Genomics and personalised medicine, we've been talking about it in our sector for a number of years, but it is here now, and being able to tailor your treatment specifically just for you through genomic technology is very much here in oncology, and it's spreading to other disease states. The other two areas that look really interesting is obviously AI in diagnostics and medical devices. We've actually invested in a couple of companies using AI, and I guess we'll see a lot more AI in the sector. And the final one that looks really interesting also is advanced 3D printing. 3D printing's been around for a long while, but we're now seeing advances where we're looking at actually 3D printing artificial organs, including livers and pancreas. So there's some of the areas that we're seeing right now, I guess.
Wonderful, thank you, Glenn. And perhaps moving at the start there, Den, when it comes to emerging trends that you've seen, could you perhaps talk us through what's looking good to you in context of what you do in your role?
Thank you. Absolutely. And welcome everyone to the second day of our conference. I think the disruption is all over the place. I've been in this industry for more than 25 years. Each time I say that, I feel like I'm getting older by another year. uh, I possibly will start just seconding Glenn in terms of the scale of disruption in health tech. We also invested in some of the companies in AI in medicine. What is coming next is even more exciting for all of us, potentially pushing the boundaries of our lifetimes, right? I'm talking about more powerful AI, quantum computers that will potentially challenge the problem of proteins and these problems, as we know. It is powered by high-performance computers, a lot of data, computation capacities. So these are the trends that are disrupting. They've been around for a while. I think what is disrupting the disruptors is even more interesting, and this is how you make this digital mesh, this multiverse of technologies working with each other, right? It's multiple technologies used in multiple ways, quite often with each other, like AI on a lot of data, with a lot of computation capacities, or AI on top of blockchain, right? Or blockchain potentially used in gaming industry. NFT is another example that will disrupt the entertainment industry a lot in the coming years. So there's lots and lots of trends. It's like a digital mesh, right? So how do you make sense of that digital mesh? And that is beyond technology, actually. I want to finish with example in medicine, because I think this is definitely a very powerful scale of disruption. The 3D printing on the macro and micro scale. Right, so we invested in one company out of Yale University that is actually printing, 3D printing bones, right? And that has implication and application in different cases. Oncology, of course, what is happening in the world of conflict as well, so, and many, many other cases, trauma, of course. So, yeah.
Fantastic. Thank you, Dan. And Katrina, you work for Coca-Cola. Can you explain how emerging trends play a role in your current position, and what's on your radar when it comes to what's on the horizon here?
Thank you, everyone. Thank you for coming here, firstly. Good morning. I'm Katrina, and I work for CCP Ventures, so that's Coca-Cola Europacific Partners Ventures. So what we do now, what we focus on is Horizon 2 and 3 of technologies that would support and achieve our sustainability goals. So really focused on sustainability innovation at the moment. So a couple of examples that we've been looking at is, number one, the conversion of carbon dioxide to sugar. So the technology is already in place, so we're looking for a format that would utilize lower conversion costs. And then the second one would be direct air capture. So, and I'll say more later, but you know, direct air capture that would utilize, again, a more efficient way, I mean, solvents in detaching itself from the carbon, but in a much lower temperature. So those are a couple of examples.
Fantastic. And Lisa, you are the CEO of Wavia. Can you outline how your role really positions you to look at emerging trends and what's catching your attention?
Yeah, absolutely. I think most people would be familiar with me as my role in Singularity University. And so a lot of people are familiar with us as an international organisation and teaching about technologies of the future. I also have the pleasure of working with Bill Tai on a weekly basis, and so I seem to be emerged in the future. And I think probably one of the biggest trends to talk about here is that we've actually got non-technical people investing in DeepTech, which is super cool. And I look back, we tend to set the contrast. So if you look back over 250,000 years, how humans evolved, and then understand where we're at right now, and probably only go 100 years into the future. So I'm looking at predicting some of those technologies, whether it be nanotechnology, bionics, robotics, AI, network sensors, AR, VR, synthetic biology, I'm super excited about. and then how that's going to relate to our everyday lives. So thinking about the impact that we can all have as individuals is a huge trend. 500 years ago, only kings and queens could impact 1 billion people. 100 years ago, it was the industrialists. Today, it's you and I. So I think in my role at the moment, I seem to always be researching deep tech. We've got 300 international expert faculty who are typically PhD and in deep tech, so it's connecting networks to be able to do that due diligence, particularly from an investment point of view. My research that I'm really excited about is personally how devices and sensors are going to impact our everyday lives in the next 10 years, and how that relates to healthcare and longevity. So I'm 39, I'm having a little bit of an age thing. I turned 40 in 2 months, so I'm thinking about the next 100 years and when I'm 139 and reflecting back on this moment. And I'm not sure if anyone else, I'll have a show of hands. Does anyone think they're going to live to over 100? Any longevity believers? We've got a few. And so non-invasive health tech. I've also had 2 kidney transplants, so I want to know that I don't have to have a blood test every month, that we can do that in non-invasive ways by being able to have devices and sensors in the homes, and whether that's even 3D printing a tablet each day based on my own biological needs. So I've got the Aura-ring now and sort of looking at those different trends. And so there's quite a few things and trends that I'm looking at now, but I think that context is really important. And so, how we look at investments now is really what are humans going to need, and what's a huge market, like 1 billion people population, such as Africa, Asia, and India.
Absolutely, some great insights there. And Mike, how about yourself when it comes to emerging trends?
Hey, thanks very much. Mike Nicholls, partner at Main Sequence. Fantastic list of topics there. I'll add a few things to that. Right here in Sydney, we've got a company called Inventia that's building a 3D bioprinter that can actually print human cells, print cancer cells, brain cells. I'm not sure they're doing kidneys yet, but they're definitely doing skin. So I think that's pretty interesting. I'll add one on the therapeutic side. There's a couple of companies here in Australia doing a thing called theranostics. Theranostics is a type of radio treatment for treatment of cancer, which attaches a microdose of radiation to a protein that attaches only to a particular type of cancer cell. And so instead of hitting you with massive amounts of radiation, as I've had as a stage 3 cancer survivor, where literally 34 treatments in the machine, massive amounts of radiation, they do microdoses, 3 or 4 injections, go home, you're okay. I think that's super interesting. Synthetic biology you mentioned, which I absolutely agree, across medicines, across food, across materials, recycling of plastics, creation of new types of foods. I think the other thing we're seeing at the moment in semiconductors, almost nobody spoke about semiconductors for a decade in Australia, maybe longer, but everybody seems to be super keen about them right now. We've been building semiconductor companies here for the 5 years that the fund's been involved. We've got 2 ones that are growing quite big now. But what we're seeing there is we're seeing the Cambrian moment where open source is now starting to hit the semiconductor tooling and design space, which we didn't have. Like if you think about the internet had open source for the last 15 years or so. We got Linux, we got WordPress, we got dozens of platforms. We haven't seen that in silicon yet. And the thing about software might be eating the world, but without silicon, there's no software. So if you can't build processors, you can't build software. And so that's really interesting. I think the Ukraine-Russia scenario has accelerated the pace of renewables transition for energy by at least 5 years, maybe 10 years. All of a sudden, everybody wants storage. Everybody wants renewables because of the crazy pricing that's going on in coal, oil, and gas. And so those, for me, are probably the most interesting things.
Brilliant. Some excellent insights there. Next, we're going to look at risks. As we know, investing in deep tech or life sciences can present risks for everyone, including the investors that invest into those companies or even the companies that are working on them. So I'm going to ask our panelists to give us some advice from either an investor perspective or a company perspective. From an investor perspective, asking, what would you advise someone to look out for when they're looking to invest in this space? Or if they're answering from a company perspective, perhaps asking, what can companies do to de-risk? As we know, the higher risk, the better opportunity for greater returns, but does it come from employing experts in the space, for example? So perhaps over to you, Glenn, if you can let us know if you want to answer from the investor or company perspective, what can be done to reduce risks in this space?
I'll briefly comment on both sides of the equation, if you like. Firstly, in terms of an investor, if you're a non-technical person and you're investing in life science, it's a risk. The number of people that can understand some of the technologies when you dig deep into a company are very few. So there's a couple of things you can do. Ask an expert or ask someone who is acknowledged as a key opinion leader in that particular area. That's hard because some of these people, are very difficult to get to, and most of these technologies are global, so they may well not, or they may well live in another jurisdiction. So the other thing you can do is look at investing through a fund that has a very experienced investment committee and has a very sophisticated due diligence process. So there are two ways, but it is risky if you're investing in a technology that is very complex and you're a non-technical person. It's a risk. The other thing to do, of course, is to make it a portfolio play. Investing in one life science company and expecting a result is fraught with danger. Always better to make it a portfolio play. Look at investing in 5 to 10 companies, for example, because we know that that the success rate is, especially in early stage companies, could be 1 in 10. So a portfolio play is one way of doing it, and the other way is to actually invest in a fund that has a sophisticated team of both people on the investment committee and a due diligence process, which takes out that risk for you. And briefly on the other side, life sciences is one of those unique areas where minimising risks maximises value. And really that's all about understanding what the risk profile is in a company, all the way from development risks, regulatory risks, reimbursement and market risks. And as you reduce those risks, your value goes up. And that's all about minimising risks and about talking to experts in that particular area that can help you do that.
Thank you, Glenn. And Den, how about yourself from a company or an investor perspective? How can they be reducing risks in this space?
Fantastic question. Wasn't sure it was working. I have an answer that I recorded as a small video called 11 Magic Beans. That's my formula, right? But just coming to this panel, I thought about what can I say to non-technical. I agree with Glenn, potentially out of all options where you can go and invest directly on the stock market, through the fund, through the consortium, just follow someone in private investment. I think a non-technical strategic investor is down to 2. One through the fund, as Glenn mentioned, which will give you the support and the insights and the confidence that you are covered for those areas of competencies that you're potentially missing. And another one is how you cover those gaps, potentially through your own research and learning, right? And you can go as deep as you want, but my recommendation is if you are a strategic investor and you are beyond the money investor, you do take your time, do your research, formulate your approach, investment approach, whether it's 11 magic beans or just 3 of them or 21, doesn't matter. Do your research, take your time, and invest beyond money. I am more personally of a prefer focus rather than diversification. I think the focus pays off, and the focus is all about actually engaging beyond that concept of money or quick return on investment in 2-3 years. That's potentially going too far, but yeah, thanks for the question.
Great, thank you. And Katrina, how do you approach de-risking investments? And do you have any tips for investors that are looking to do the same?
Well, I think my experience would cover corporate investors, to say the least. Being a corporate, we've got the flexibility in terms of levers that you could use to mitigate risk, and that would include, multi-year partnerships with universities for research, or you could do a short-term commercial partnership, like a pilot with a startup, or even and multi-year commercial partnerships with startups depending on their stage, and this is all on top of minority equity investing as well.
Great, thank you. And Lisa, how about yourself when it comes to risks? Any guidance for people looking to reduce risk?
Yeah, definitely the first one is understand what the technology might be disrupted by, because there's some really cool technologies that will supersede potentially what people are investing in. And one of my favourite, they've actually just found a Rosetta Stone to be able to understand our genes and how to use CRISPR technology better. And so we might actually be able to completely cancel out cancer and a lot of diseases. So I think some of those things is just seeing a little bit of a step ahead. Timing is important, and typically it's a longer time to exit, so knowing that exit. And the really good deals are typically hard to get allocation in. And so being able to really do your research and partner with people and keep your eye on what's happening, and definitely Main Sequence Ventures is one that I certainly keep my eye on and love what you guys are doing. So I think research is really important, and don't be afraid to ask. We're in a world now where you're 1 degree of separation from anyone that you need that might have the answers.
I love that one personally, being a former broadcast finance journalist, that there is no such thing as a dumb question, and that life is only limited by the ability of questions that you can ask. So I'm a big fan of asking questions. And finally to Mike, when it comes to reducing risks, any tips for companies or investors?
Yeah, look, the thing I'd say to you about deep tech investing, the 3 things that can trip you up every time are chemistry, biology, and physics. All 3 of those things can trip you up without any problems. And you might actually want to believe what you're hearing is true, and it might be true, but it also might not be true. And I think the secret is trying to work out, there's lots of good-meaning people, well-meaning people that are trying to bring something into the world. What your job is to work out whether they really have the depth of knowledge about that space to actually make that true, if that makes sense. Now, the double-edged sword of that, so yes, ask an expert, definitely. We're lucky we've got 4,000 or so experts in CSIRO that we have a relationship with, that we can ask about just about any science topic we like. But the other double-edged sword of that is that they say that science advances 1 death at a time. So one person that might think something can't actually happen is very often replaced by somebody who actually made it happen. And we've seen that through the history of science over decades. I would actually also make the point about allocation and reinforce that. You got to ask, how did I get into the opportunity that you're looking at? Because anything which is pretty hot is actually, you're right, pretty hard to get an allocation. And so you've got to ask whether that person has really deep insight into it. They don't accidentally get into these things. It's not somebody graduated from university, might have had, business or arts degree. They can't just go cure cancer. It doesn't happen that way. The person may have spent 10, 15 years working on this problem. And so I think you have to question really deeply. And then portfolio is important, because these things follow a power law. 97% of cancer treatments, proposed cancer treatments, candidates if you like, don't actually make it to production. Only 3% of cancer drugs actually get through to the market. So that's a massive failure rate, and it does follow a power law. And 10 companies probably isn't enough. You probably need 25 to 30. And it's hard to get that on your own. It's really hard to get that as an angel investor. So, yeah, that would be, you've got to watch that.
Brilliant. And now for our last round of questions, we're going to focus on Australia, what makes it an exciting place to invest, and also what are the exciting opportunities that are perhaps capturing our panelists' eyes. So if we can just really keep to the highlights, about a minute each, starting with you, Glenn. What do you think makes Australia an exciting place to invest? And also when it comes to opportunities, what are you most excited about at the moment?
Well, I could talk about this for an hour. I spent
Yes.
15 years talking about why Australia, both here and internationally in life sciences. Look, we punch way above our weight in terms of life sciences globally. We have a world-renowned R&D capability in Australia, both through our medical research institutes and our universities. We have a sophisticated healthcare system that is second to none, even with the current problems we're having. And we have excellent people across the board. And certainly over the last 10 years or so, we have become much more capable from a commercial perspective. We've seen a lot of Australians come back who have had senior positions in international medtech and pharma companies. So they've added that commercial expertise to Australia. It is a great place to invest in life sciences. And as my time in AusBiotech, we spent 10 years taking our companies internationally to global capital markets, and we're very successful. So I don't see that changing. The companies, I've spent a lot of time in the last 12 months looking at early stage companies, life science companies, and it's just as exciting now as what it was 10 years ago.
Thank you. Thank you very much, Glenn. And Den, when it comes to Australia, why do you think it's a unique place to invest?
All what Glenn said, plus, to be direct, it is quite a safe greenhouse for soft launch and beyond. Just to expand on that, as the size of economy is and the quality of economy is more than sufficient for soft launch, whether you're in software technology or you're in life science technology with a product or a service or a business, right? So there is enough volume of the market there to validate your market assumption, your business assumption, and to launch globally, right? If you of course want, but you can certainly succeed even within Australia. And everything that Glenn said, fantastic people, fantastic capabilities, research and development facilities, talent, though we are a little bit short on that, but still a lot of talent here and coming here as well.
Wonderful. And Katrina, in your experience, what do you like about investing in Australia, or how does it compare to other jurisdictions?
Thank you. I echo what Glenn and Dan has said, but just really emphasizing that it's got a really solid infrastructure in terms of, the caliber of research from universities. You've got CSIRO, you've got public and private research institutes. And I guess in terms of the opportunities, I think as a corporate, we play a huge role, and we should continue playing a huge role in terms of the commercialization side. And so I guess my takeaway from this is to be more embedded and connected to the academia, to research institutes, and to play that role in terms of piloting or commercializing, especially on sustainability technology.
Wonderful, thank you. And Lisa, yourself, investing in Australia, what benefits can you see?
Yeah, I'm very pro-Australia, and I think we've got the opportunity to have a disproportionate impact. But if I was going to specifically just share one thing, it would be about timing again. And 2.5 years ago, I was living in Silicon Valley, and if an Australian startup wanted to raise capital, they had to get on a plane. And so I'm looking at the trends of the amount of capital that's available in Australia, particularly over the last 10 years, and that for an Australian business now to raise capital internationally, it's very attractive to be able to get on meetings with anyone around the world, but then also our valuations are a lot better than what they are internationally at the moment too. So I think we'll see more and more funds setting up in Australia and more support for Australian technologies.
Great to hear. And Mike, finally, Australia and investing. What are your thoughts?
Look, we've got world-class research, no question about that, across the research institutes, CSIRO, universities and so on. I think this has probably never been, at least in my experience, sort of 30 years in the space, there has never been a better time to be an entrepreneur in Australia. I think the COVID aftermath or one of the fallouts has that every government across federal, state and so on, previous government, current federal government, everybody is absolutely committed to increasing our sovereign capability across a very wide range of areas. And we've never seen more money available to help drive that ambition. The Modern Manufacturing Initiative last year, the National Reconstruction Fund, and then funds across all of the state governments. It has never been a better time. We've never seen so much money in the system. Add to that the fact, and I've got 3 seconds to go. No, I'm 5 seconds over. Add to that the fact that there is more VC money here than there's ever been. I don't think there's ever been, even though we're seeing a little bit of a slowdown in the last quarter, and we're probably going to see a little bit more before we come out of that, maybe a lot more, we're just not sure yet. But I don't think there's been a better time to actually launch a startup in Australia, especially a deep tech one.
Well, what a great way to finish our panel. Thank you so much to our expert insights from our expert panelists, and to everyone that joined us in the audience. I hope you gained as much as I did about investing in life sciences and deep tech for the non-technical. Thank you very much.